Here in Africa, Ghanaian Finance Minister Ken Ofori-Atta has traveled to Asia to gauge investor interest for the nation's planned sale of $1 billion of Eurobonds. The trip to Hong Kong and Singapore isn't an official roadshow because Ghana hasn't yet appointed deal advisors for the sale. The book runners will be appointed as soon as lawmakers have voted to approve the debt issuance. Officials from the local unit of Standard Chartered PLC, Fidelity Bank Ghana, and Ghana Commercial Bank Limited will accompany Ofori-Atta on the trip. Ghana plans to issue the Eurobonds by April to help finance the forecast budget deficit of 4.5% for 2018. Meanwhile, Ghana sold 1.99 billion cedis worth of a fresh 5-year domestic bond on Thursday, and the major commodity exporter will pay a yield of 16.5%. Initial guidance for the bond, open to non-resident Ghanaians, was in the range of 15% to 16.5%. Total bids tendered for the paper were 2.01 billion cedis. The government plans to issue a total of 11.13 billion cedis in the first 3 months of the year, of which 8.96 million cedis are rollovers to restructure maturing debt. Ghana, which exports cocoa, gold and oil, is in its final year of a $918 million credit deal with the International Monetary Fund to reduce deficits, inflation and public debt, which hit 70% of GDP last year. And in Angola, the dollar bonds fell 1.5 cents on Thursday to its lowest since end December after Moody's put the country's credit rating on review for a downgrade. The issue maturing in 2025 traded at 114.7 cents in the dollar. Moody said the decision to put the country's B2 rating on review was prompted by the deterioration of the government's balance sheet and an increase in gross borrowing requirements compared with the agency's expectations in October 2017. In South Africa, Pioneer Food Group has reported a 2.4% drop in turnover for the 3 months ended December, largely due to sales price deflation in soft commodities. Excluding Nigeria, group turnover fell by 3.3%. The company, which produces Weet-Bix cereal and liquid fruit juice, said South African revenue declined by 5.2%, while revenue from the group's international business, including South African exports, grew by 19.5%. Pioneer is recovering from an El Nino weather pattern which ended in 2016. It triggered drought conditions across the southern African region that hit the staple, maize, and other crops. And Russian fertilizer producers Artem and Alkali plan to boost sales in Southeast Africa. Rising commodity prices and dramatic political change in the region have vastly improved the investment mood in the mining sector this year. Artem and Alkali plan to create a hub in the two countries that will directly supply mineral fertilizers after co-owner Mazepin met Zimbabwe's President Emerson Mnangagwa and Zambia's President Edgar Lungu. They expect demand for the product to grow rapidly in the next few years. Fertilizer demand is on the up in Zambia as it tries to diversify its economy away from copper mining to agriculture, but the nation still imports most of its fertilizer from South Africa. NAMDEB, a 50-50 joint venture between the Namibian government and Anglo-American's diamond unit De Beers, has put the Elizabeth Bay mine on sale. The sale comes 3 weeks after the diamond miner wrote to staff offering voluntary redundancies that will affect at least 130 of its 1,700-strong workforce. And Zimbabwe will consider applications from companies mining platinum or diamonds to be exempted from a requirement that they be at least 51% owned by black citizens of the country. The government wants companies to show they have a plan to achieve compliance before it will consider granting waivers. Zimbabwe has abolished ownership requirements for all minerals other than platinum and diamonds and President Emerson Mnangagwa said last month those requirements may also be lifted in the future. Zimbabwe has the world's second biggest platinum reserves, and producers, including the two largest, Anglo-American Platinum Limited and Impala Platinum Limited, have slowed investment plans in the country because of the ownership law.